Welcome back. You're still tuned into Trading Hour. Indian Bank reported a strong set of second quarter numbers. It reported an improvement in the asset quality, while the net interest margins came in under some pressure on a quarter-on-quarter and on a YOY basis. To discuss the company's quarter two performance, we have with us Mr. S.L. Jain, the MD and CEO of Indian Bank, joining in now. The stock is up 3% at the day's high in a weak market. Mr. Jain, good morning. Thank you so much for joining in. Well, it's a strong set, but if we talk about the NIMs, they've come in under a bit of pressure, 5 basis points down on a sequential basis. Can you explain what happened here, and do you stick to your net interest margin guidance of 3.5% that you had given earlier? What's the outlook on cost of funds as well?
So good morning. Happy Dhanteras. You see, our net interest margin has come down from 3.44 to 3.39. And you know, because of the RBI guideline, the penal interest has been booked as a penal charges. The impact of that is 6 bips. So if you add a 6 bips, it is 3.45. So we, in the beginning of the year, we said that we will be having a margin of 3.41%, and we are stick to that margin. We will be having better than this. If you see the quarter on quarter, the cost of deposit has increased by 8 bips. But bank could be able to maintain the yield on advance also by 8 bips. So we are protecting our margin. And one more reason is that we are growing in a RAM segment, which is giving good margin, and at the same time maintaining CASA above 40%.
Okay, so maintaining a NIM guidance of 3.4% for the full year. Mr. Jain, morning and season's greetings to you. Can we talk a bit about your slippages? Because your slippages have come down sharply on a quarter-on-quarter basis. What led to that? What could be the guidance on slippages for Q3 and Q4? Will it be similar, or could you continue to moderate? And therefore, what could the slippage ratio be? Can it come down to levels of 1.25%, and your guidance on recovery too?
Slippage was 1.06%, 1,357. Yes. And slippage has come agri side 680 crore, and then the MSME. The slippage increases when your collection efficiency is down. You see my collection efficiency, we are maintaining it 95%. So collection efficiency is continuously same. So going forward, naturally the slippage will come down. And you see on a quarter-on-quarter basis, it has come down from 1,900 crore to 1,300 crore. And one more point here is the recovery. At the beginning of the year, we said that our recovery will be between 7,000 to 7,500 crore. Internally, we decided that we have a 2,000 crore of a recovery per quarter. We are having a recovery of per quarter 2,000 crores. So in a half year, you see we are close to 3,958.60 crores. And you see our trend also. This is a bank continuously performing. Continuously, our recovery is more than the slippage. Last year, you see, prior to that also you see, and quarter on quarter you see. And because of that, our gross NPA has come down, net NPA has come down, PCR has improved.
Okay. So slippages were nearly 4,000 crore in the first half of the year, approximately. So for the full year, can you do 8,000 crore?
No, slippage in the first half is...
Sorry, I mean recovery.
Recovery, we said 7,000 to 7,500. Generally, we do better than what we guide.
Okay. And the slippage ratio, will that be between 1 to 1.25% this year then, sir?
Yeah, it should be. It should be in the range of around 1%.
All right. You know, your fee income was robust. Can you explain what was the reason for that? And is it something that you can sustain in the second half as well?
The fee income has grown by 11%, and fee income has grown by because of the transaction charges, because of even the PSLC income has increased for the bank, which is around 8 or 9%. All our other incomes are increasing, digital transactions incomes are increasing. So you see the bank continuously 10-11% growth we are having.
Okay. You've given a guidance of 11 to 13% for advances and 8 to 10% for deposits, right?
Right.
So this 11 to 13% advances, can you provide some color from where it's coming?
We said 11 to 13%, and we have grown by 12%. If you see our growth, we have grown 14% in RAM. Retail, we have grown by 15%. Agri, we have grown by 16%. MSME, we grown by 8%, but standard MSME, we have grown by 12%. You see the MSME NPA has come down. Likewise, in corporate also, we grown by 9%, but the standard corporate, we are growing by 11%. So all segments, we are growing in double digit. Even in the retail housing loan, we are growing 14%. Auto loan, we are growing 51%. Jewel loan, we are growing 21, 22%. So bank is growing in all segments. And that is why we are confident of achieving 11 to 13% of a credit growth.
Okay. All right, Mr. Jain, thank you so much for joining in today and giving us your take on what happened in Q2 and most importantly, what the outlook is going forward. The stock is higher in trade today and we would like to wish you and the entire team of Indian Bank a very happy Diwali. With that, we'll do one thing. We'll slip into a break. But as we do that, CNBC-TV18 celebrates 25 years of excellence. We invite you to the most anticipated event of the year, the CNBC-TV18 Global Leadership Summit, bringing together visionary policy makers like Finance Minister Nirmala Sitharaman, RBI Governor Shaktikanta Das, industry leaders like HSBC India's Hitendra Dave, Kotak Mahindra Bank's Uday Kotak, and trailblazing startup founders. This is where the roadmap for India's next 25 years of growth and global leadership will be charted. You do not want to miss this.